It's a 55% short interest, so you have to be very careful whenever you get any hint of positive news. But when you look back at a chart, the last thing you want to hear out of your stock is we're back to 1998 support. This has been an avalanche off a cliff that you've seen this stock fail, but you would not want to be shorting it right here because obviously any hint of good news at all, and if the CEO comes in and starts closing stores, running it more efficient, the upside could really hurt the shorts tremendously from this point going forward.
It's been a disaster now for years, but you look at the last quarter, which was not good on October 2nd, but one thing stuck out, and we actually talked about it, I think. Merchandise inventory were down 17%. I mean, they stripped down inventories in a major way. And what does that mean? Well, maybe they're sort of greasing the skids for this next quarter. Maybe margins will improve. Comps are disaster, but to Steve's point, 53% short interest. Stocks had a run. Dana Telsey, her firm, was sort of the axe in the space, has a $14 price target. That's probably where it trades to.
Well, these stores were called big box retailers for a reason, because they had a lot of inventory. You go in there, you get the big box, you leave. And let me tell you what happens right now, because I've spent a little time in the Bed Bath & Beyond recently. Yeah. When they don't have what you want, you know where you go? You go home and you go to Amazon and you order it and it gets delivered to your house. I mean, so you could have all the 20% coupons you want, Mel. You know, I'm just saying.
Your shopping habits notwithstanding, Dan, I think the stock can go higher. That's what we're saying.
I think Steve's point about the short interest, every time this thing sells off, you don't buy it tomorrow, but every time it sells off, you probably buy it.